All right, so for so many of us who run a business in Australia, the April 28th BAS deadline is just, another thing on the to-do list. A little bit of stress, a whole lot of paperwork, and then we move on. But what if I told you there's a massive risk hiding in plain sight behind that deadline, one you really, really need to know about? 1 billion. No, that is not a typo. That's how many transactions the Australian Taxation Office, the ATO, is now tracking every single year with the help of some pretty sophisticated AI. It's a number so huge, it completely changes the entire game when it comes to business compliance. So I know what you're probably thinking. My business is small fry. Come on, they're not looking at me. Well, with this level of automated surveillance, the whole idea of being too small to notice, that's officially over. Every single transaction, every report you file is now a data point in their massive, ever-watching system. And this is where things get serious. We're in a whole new world now. The ATO's capabilities have taken a giant leap forward, and with new rules to back them up, the risk of your business getting flagged for a review or even a full audit is higher than it has ever been, for everyone. Just take a look at these two major changes from 2025. First up, you know that GST refund you might be waiting on? Well, if the ATO smells something fishy, they can now hang on to it for a full 30 days. Double the old time frame. Think about what that does to your cash flow. And second, they've started forcing thousands of businesses onto mandatory monthly BAS reporting. Imagine that extra headache and workload. So how does this AI bloodhound actually find you? Well, it's all about data matching. It's basically a giant automated game of spot the difference. It's constantly checking, does the GST reported actually match the cash that landed in your bank account? Does your payroll data from your single-touch payroll system line up with the PAG reported on your BS? Any mismatch, doesn't matter how small, can automatically throw up a big red flag. Okay, but here's the real kicker. This is the part nobody seems to be talking about, and it's probably not something your accountant is going to bring up. The single biggest risk here isn't a tax fine. Nope. It's a huge hidden gap in your business insurance that an ATO audit can suddenly blow wide open. And let me be absolutely crystal clear on this. One little mistake, a bit of undeclared cash income, a simple miscalculation on your BAS, could unintentionally create a devastating, completely uninsured risk for your business. The kind of risk that could literally wipe you out. It's called the underinsurance trap, and here's how it works. Let's say you told your insurance company 2 years ago that your annual revenue was $1 million, but the business has grown. An ATO audit comes along and proves your actual revenue is now $1.5 million. Now disaster strikes, a fire, a flood, and you need to claim on your business interruption insurance. Guess what? The insurer is only going to pay you out based on that old $1 million figure you declared. The $500,000 gap, that's on you. And it doesn't even stop there. The cost of just defending yourself in an audit, the fees for accountants and lawyers, can run into the tens of thousands. And even scarier, if the ATO finds issues with your payroll tax or your super payments, they can issue what's called a director penalty notice. That means the corporate veil is gone, and they can come after your personal assets, your house, your savings, for the company's tax debt. This right here is the most important thing to grasp. There is a direct, undeniable link. You understate your revenue on the BAS? Boom, you've got an underinsurance problem. You make a mistake on your employee PAYG? Bam, you're exposed to a director penalty notice. You can see it, right? Every little tax compliance issue opens up a corresponding and usually completely unconsidered insurance risk. Okay, I know that sounds pretty bleak, but here is the good news. This is totally fixable. So let's stop talking about the problem and start talking about the solution. Here's a simple action plan you can use right now, before that April 28th deadline. 4 simple steps. Number 1, just lodge on time. That's half the battle. Number 2, before you click submit, do a quick cross-check. Do your BAS figures actually match your bank statements and payroll reports? Number 3, and this is a big one, call your insurance broker and ask them this exact question. Does my business interruption policy reflect my real revenue from the last 12 months? And finally, number 4, while you've got them on the phone, ask about tax audit insurance. It's usually super affordable and can save you a fortune in professional fees if the ATO does come knocking. If there is just one thing you take away today, please let it be this. This is not some theoretical what if. The ATO crackdown is real, it's happening now, and the knock-on effect it has on your insurance is a blind spot for most business owners out there. So this really leaves just one final question for you to ask yourself. When you look at your own books, at your own processes, Is your business truly compliant, or have you just been lucky so far? Because in this new age of surveillance, luck, as we all know, eventually runs out.